All right, so let's just go through this. All right, so we'll start from that pullback. So the market basically, it goes, I think it was testing something. So you have on the higher time frame, see what the breakout is. Oh, right there. So market basically tested. It's just, this is a break and test. So you would break and then test. There's a lot of other turning points in the way that could have been traded, but whatever. So we'll just take a look at that onward. All right. So from there, you don't really see much. What you do see is against this support low, you have some type of absorption or failure over here. So just label this absorption to the downside, meaning supply is absorbing demand and breaks. And this and this, and then here is a sign of heavy selling. It's the biggest selling wave in 11 waves. After which you have one pullback, two pullback. Here there's a failure, demand failure here, and a breakdown. So here demand fails, right here on the green bar. Why? Because it has no follow through. So it's failure to follow through. After that, market goes straight down, and here's very, very clear breakout. Oh no, not this one. Here is, where's the other one? I think this is it here. Breakout right there. So there's the breakout, very clean. And so this wave is game over. After that, what happens is this breakout is holding. So against this low, right? It broke, tried to come up, failed. This is failure. This is failure, guys. This is how to read. This is support, breakdown, tries to reverse, fails to follow through, and just pukes. That's failure on the side of demand. After that, test one, test two, just saw a lot of testing, and that fails. Then against this low, yeah, I mean, this slight increase in volume, I guess we call this a breakout. This here failed, right here, the 4. We tried to spring, or I don't know what they're doing, but it failed. Why? It fails to follow through at support. So it's failure. Because they try, but they fail, and market continues to go down. It's very logical. It's failure to follow through, failure to hold support, or failure to hold resistance, and it just breaks. After that, let's just get this. Here the market starts going sideways, and over here I get some volume signals. I mean, you had 800,000 come out of the market, and then 400, and then 500,000. Here it's changing. Why? Because it goes from 5 to 3, and here it's game over. Right here, when it does that rally, 300 stocks fell on this rally, and 1.1 million came out of the market. Very clear, red, 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 red. So, I mean, it's game over here. Now, when I'm looking at this, I see this is the breakdown right there. See this? Very clear. That's the breakdown. What happens? Gets tested. That's the breakdown, the 7. Right? And you have a rally and of all that. Market pulls back, reverses, goes down a little, does an upthrust while retesting the breakdown. And this is a big wave, meaning things could have happened. You know, they could have reversed something, done something here. You know, it's also at the higher time frame support, so I am expecting this, but unfortunately the bulls lose. Why? 171 stocks decline On how much? $1.3 million. So it's pretty clear breakdown. And pulls back a little, about 700 grand, and retests about 500 grand. So I mean, if you're going to get in, you have to get in right here, somewhere here. All right, so we see failure, failure, failure. Where? You see this trend line, draw it horizontally, and goes up, goes down, attempt 1 fail, attempt 2 fail, attempt 3 fail. Whew. So they're really trying to hold this low. Really trying. These guys right here, they're really trying. You know, they're trying to hold that low or covering, I don't know. But attempt 1 fail, attempt 2 fail, attempt 3 fail. More buying, more buying. Either short covering or trying to hold that low. But they can't do it. Both fail. And it pukes. So, I mean, if you see this rally, you know, it's time to get in. If you can, get in. If you can't, oh well. What to do? You know, after that, the market goes down and start moving sideways. Another rally down, confirmed by lower lows in the money coming out of the market. But this is a little shady. Oh no, wait, they have 1.1 million, another 1.1 million, about 4 million. Rally, another rally. Damn. I mean, it's just getting slammed. I don't know what to say. It's getting slammed. All right, now here is what, you know, just too good to be true. All right, so here this rally, you have about 1.1 plus 400,000, 1.1 million and 400 grand, then 1.7 million. It keeps going down, keeps getting slammed. Another million, cover 400 grand. Here, 1.7 million right there, right in here. With 80 stocks declining, very nice. But the damn thing, this short was too good to be true. And the market came strong on 1.1 million. You know, what to do? It came 1.1. So this rally here, there's a rally. Anyway, where it offered a nice little turning point was right here, where it came on 1.1 million. That's a lot, guys. That's the biggest in 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. Keep going and going and going. This is some type of buying or short covering, I don't know. But this right there is, that's where, if you were going to get in, that's the place to get in, you know, on any pullback, because you have biggest volume, biggest price in 49 plus waves, big 90 stocks going up on biggest up wave in 9 waves. Then 1.1 million just on this wave, 1.7 million on this wave, pull back on 3 and 5. So it keeps on going up, keeps on going up. Here's where you have trouble. Right here, you have a lot of effort and no reward. What do I mean? 800 grand, does it make a higher high? No. The other market, the other things don't show that. Price doesn't show that. Here you see the money coming in, but the market's not going up. So what happened? Tap, tap, break. Very nice. 1.6 million, 73 stocks. Then over here, another rally, on 56. So 56 stocks, 1.6 million. I think one. Then all this buying pressure. Anyway, it rallies up here on 1.7. That's a legit rally. And I don't know what happened here. Just big selling wave. I thought it was going to go break. I just thought it was all right. The game over. Why? I mean, it goes all the way down. So, but somehow it just went crazy. End of day. 3.5 million, 170 stocks, another 3.3 million, 164 stocks. What the hell? Just keeps going. Boom, boom, boom. Rally, rally, rally. And I guess one of these pullbacks could have been obtained. This is a rally. It just doesn't pull back enough. Another breakout. Anyway, long story short, this is where I'm going to expect a reversal around Monday. Okay, so we want to see the action on Monday. Why? Look at this. This area. Look at that. 12. That is where the breakout occurred. And the entire move end of day did nothing more than go to the breakout. All right, so we're just going to take a look at a couple of trends and see how to trade them. So, we take a look at this turning point up here. Market went into an upthrust position, and let's see what happened. So the market rallied, it went into an upthrust position, and from that position you had some selling over here. That's your change of behavior. Let me just delete all this. Anyway, that's your change of behavior. As the market hit an upthrust position, you had selling. The initial selling, though, if you look really closely, this is the absorption to the downside. How do you know? Well, just draw a line at support. And then when it does this up, down, up, down, up, and down. So they absorbed the demand and broke through. Market tested and selling and found selling. And then these are just some attempts there, and they fail. Here you have the breakout. Where's the breakout? It's right here where it says 5. Why? Because there are a couple of things that are going on here. If you look closely at this support, what happens? Fail. The green bar attempted to spring this low and failed, and you had a breakdown. Again, this low, where I think this is also failure, but I'm not sure exactly where, so I'll just remove that. All right, the point is, what happens at support? You have breakouts, absorption, springs up, thrust, and failure. All right, failure is like when you get one bar and it has no follow through, so it's a failure to follow through. All right, that's an indication of weakness. Anyway, so the market breaks down, goes sideways. And puke fast. Here it's in a lot of trouble. A lot of trouble. So, I mean, it just continues to go down, 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 and you see very clear rallies on breaking down. Okay, you see clear rallies, 629 stocks, then 624 stocks declining. There's no. I mean, if you take a look at this, right, it started with about 273 stocks, 71 pulled back, 129, 53 pulled back, 152, 69 pulled back. What do you see? It's that here you had 131 and led by 624 stocks declining. They're done. 624, there was a response for about 288 stocks. And it just didn't follow through, and it broke down, rally, very clear rally here. 342 one stocks, net 1.3 million left the market there and pulled back and broke down right there with more money coming out of the market. I mean, that's all. It just puke fest. Here, this is where this is what you got to know. So it's at support, right? So this is really important. Again, what these critical points of support, resistance, that's where buyers and sellers try to attempt. Either they're going to cover their shorts and renew selling, or they're going to look to buy, and it'll be a change of behavior to create a new uptrend. But we know the market's in a downtrend, so obviously the more likely scenario is that it gets to support and they cover, and then they sell the balance, because it's a good place to cover. So this here, you do get that same pattern of a climax followed by a change of behavior, followed by a nice little higher high. But this is the problem. Like the signals and patterns, how should I say this? The same exact pattern in two different situations can mean two different things. This is buying for the purpose of covering your shorts. It is not buying for the purpose of creating a trend. It is buying, and how do you know that? You just have to know the higher time frame position, you have to know trend and all of that. And this cannot be identified mechanically in a system. You cannot say that this is short covering that's going to sell off versus this is authentic buying, low accumulation to put the market into markup. So this is where the judgment, you really have to just apply judgment. There's no way, no system, no indicator will tell you anything else. There will be clues. That's all you're going to get. What is one clue? One clue is on this pullback. First, the rally was only $500,000 up to here, and then the follow through was another $500,000. So on the pullback, how much came out of the market? 900 grand on this wave. 900,000. So that's not a good pullback. I mean, if you're gonna put $1 million in, and then a 900 comes out, what does that mean? That means you covered and then just sold. So, I mean, it's just selling right there. Like, why would CM buy 500 grand, then buy another 500 grand, only to sell it all? He sold some here too. The total count here is 8. 5, 2, and 5. So 5, 5, 10 minus 2 is 8. And the total count here is 9. So there's actually more selling on this wave than in this entire leg up. So the chances of this being authentic accumulation just dropped. Because you cannot have that much, you cannot have more selling than buying. So that's one clue, but you don't know for sure. You don't know anything for sure. That clue was enough for me to say, okay, this is going to fail. All right, so market sells, 148 stocks sell, pull back, 285. Ooh, 285 decline. And you could see the money coming right out of the market, 1.5 million here, 1.1 million, then followed by 1.5 million. And then what? And then 102 stocks come up, but on less than half the volume, and less than half the money. 1.5 million up, 600K, 1.5 million down, 600K up. Like, are you kidding? It's not going to reverse. So here, for example, here's another thing. So people are seeing this, oh yeah, it's a climax. This automatic rally change of behavior. But they're not verifying it. How much underlying money is coming in? How many stocks are moving? Turns out only 148 stocks. So on this move down, 219 stocks. On this move back up, only 148 stocks. Okay, what about in terms of money? On the move down, 1.7 million. On the move up, barely 700 grand. So you think it's going to reverse? No. So it continues to go down, 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 down until here. Why? Because when it comes down here, you have the same heavy price volume action, but you have 178 stocks up, yeah, and 1.7 million net coming in dollars. So now you have something. Now you have something. And how much fell? 22 stocks, how much money? 700 grand. Before, you had a lot of damage. I mean, you had 900 grand. 900 grand and barely total is 800 grand up, 900 grand down. But this pullback, you have 1.7 million up and only 700,000 down. Then you have 9, which is greater than 7, and then pull back on 9. Then pull back, then go up again. So we're getting some buy pressure. Then it starts, something gets fishy right around here. Right around here, there's something wrong. It's just not right. Why? Because the market goes up, 122 stocks go up, but it goes up on the same amount of money, meaning 800 grand came in, but it doesn't do a new high. It's not doing a new high, but the futures are doing a new high. So that in my mind is a diversion. There's the money. This is, I guess it's the same thing as effort reward. That's the closest I can call it. But there's something not right. All right, and then after that, it breaks on 1.6 million. 144 stocks go down, and you have a nice clean, what is that? 144 stocks and 1.6, at least 1.6 million. And then it goes all the way down to this support level, some support level. This one, this brick over here, right? This was the breakout brick. So obviously you all know the breakout's getting tested, and you should be careful and cover your shorts when, anyway. So that's the, that's smart money. Damn it, I messed. Okay, never mind. So it goes test the breakout. From that point, what do you see? 1 million and another 1.4 million. All right, now we're talking. Her money is still coming in, and there's less money going out than there's coming in. Okay, now there's some legitimacy to the 206 stocks going up, and the futures are going up. It all needs to come together. Like You need money to go into the market or come out the market. You need the stocks to rally. You need the futures to respond. You need, what else? I mean, there can't be any diversions there. I mean, I think that's the best way to put it, because it has to make sense. If money's coming into the market and the stocks are rallying, that's a good thing. If money's coming out the market and stocks are declining, that's a bad thing. If money's coming into the market and more stocks are going up than down, and the futures are going up, everything is, making sense. All right, this is judgment, and this is like the same thing that Wyckoff was talking about in terms of using judgment-based approach. Because if you just do patterns, I've shown, big price volume, climax, and big price volume, but a potential change of behavior, but the money's not there. So, and there's more selling than buying, so you cannot make sense of that. Anyway, the point here is signals and patterns by themselves don't work. And even that machine learning and AI and all of that, that also is just a modern day indicator. Good luck with that. All right, so over here you have that 1.4, then 1.7 million. Here there's a problem because you have 1.6 million down. It's still not greater than 1.7 million. And then you have now 1.7 million. So market has a critical point right here. Critical because this is a lot of selling and it's responding. So you have selling and you have 285 stocks going down, and you have the market, the futures also, being screwed. So it goes down. So at this point, as far as yes, there's a bullish background. Yes, there's a heavy selling. How will the bulls respond? How will the bears respond? This could be the point where markets make a new low. But instead, what do you see? 1.6, 1.7, and all of a sudden, 2. Then 8 up and 7 down. Something happened. How do you go from 1.6 million to 1.7 million to 200 grand? So this is giving the bulls a chance. Why? Because it makes a higher high and you have 500 grand and then 800 grand, making more, buying, more money coming in, and selling on 2 tests, going from 17 to 2 and 7. So there's an issue here for the bears. If they try to press once, got a very poor response. Try to press again, got a little bit better, but cannot break support. And that's what, that's when the bulls said, what, let's just run this shit. And they came in and it just went crazy, 5.6 million, and just went nuts. So anyway, this is one way of reading the market. I think this is a good way of reading markets. It makes sense, and that's really important. If it doesn't make sense, literally think about it. If it doesn't make sense in terms of money and stocks rallying and declining and the futures responding and no diversions and all of that, and then putting all of that around support and resistance levels and understanding the higher time frame and, putting the whole thing together, that makes sense. Here, for example, when it was doing all that, you have very clear indication of what? Of the breakout right there, where 4 and 4, right? So what happens at resistance? That's what I've been harping on. Well, made these lower lows, then volume picked up. There's a little breakout here. There's another breakout right there, and then it starts breaking out right here. There's another breakout right in this area, There's another breakout right in that area. Is that 13? And they're just taking it all the way up top. Now, having said that, note that the market basically went to an area of a previous breakdown. That this entire leg up may just be a test, meaning end of day covering on a Friday to test breakdown levels earlier in the week, which is exactly what the market's at. How do I know? Take a look at this chart. I'd labeled this already. This is the initial breakdown, the 13. See that? What's this shit? 1, 2. This 13 is really 13,000 contracts that broke the trend, the uptrend here. Where did the market go? Right into it. You see? Right into that zone. So what do you think is going to happen here? I've already explained that turning points, where do they occur? All right. So this is exactly what you need to know as a Wyckoff trader, right? You need to know this. Turning points have a tendency after the rally, obviously at the top of a rally, right? But this is very hard to determine. Right? You don't know what's going to happen. It may work, it may not work, and because this is a counter trend at the top of a rally, you put there's a turning point, you take it, it'd be counter trending. So the first place to look as it's pulling back, so you have a turning point at the top of the rally. The first place to look is where? It'll be a high volume brick. All right, you might have that high up. The second place to look will be creek. This is the typical support resistance, right there. What is the third place to look? Third place to look is when you have a deep pullback, which will be against the first bar of the rally. The first bar of the rally. All right, those are the three. 1, 2, 3 spots. Then you might have a fourth spot, which would be a slight penetration of support going into a spring position. So that's the 4 key spots, which are the counter trend, the breakout test. So when I say it's going to a creek, what I mean is there's also breakout tests. I mean, you might have minor creek in the middle here somewhere. So I'll write it. Basically, these are the spots. 1, the higher time frame rally top, which is very tough to catch because you will have up thrusts there and springs, and they will shake you out. Or it may be like a little move and sell to buy, that type of thing that screws everything up. All right, the one that's I think more predictable is the test of the breakout, and this could be at Ison Creek, right? Then there's the low bar and the high bar. So which is basically where the origin of the rally, right? And then you could have your high time frame up thrust and spring positions. There is another spot within absorption areas, but I mean those are springboards and they can just go crazy, and you have to know how to play them. A lot of folks will just play that. I mean, they'll just draw a line at resistance, wait till the market goes to resistance, see the behavior there, see if it's a breakout or an absorption. If it's absorption, then they'll go to a lower time frame and see if they can catch an entry. But these are your real, for lack of a better word, POIs. Why do I say that? All right, why do I say POI or levels of, I don't know what to call them. Delete. You must, in my mind, it will help trader tremendously to have a model in their head, because you know exactly where the buying is going to come in or where it should come in. And that model, when you think about it, is critical as a trader. Why? Because you have expectations about where it's where the buying is gonna come, and it's gonna come there. You know, and these are real levels, because these are based on trend. They're based on breakout trend. You know, they've existed forever. I'm not making some shit up on put on YouTube. You know, so if you 1 second, this is based on trend. This is based on trend going up and down. Well, what you see is, I mean, this is where it happens. It's going to happen, right? But you have your rally. It's going to look like this right here. Right here will be a turn. It'll come back down. Where will it come back down to? Either high volume break or creek. Creek was that resistance turn support. Why does it go there? There's many reasons for that. Typically, that's what the breakout is. Or it can go to that area, and then the sellers who are underwater, they'll cover and it'll cause the rally. So that's another spot. And then if the market goes all the way down, for example, it does that. You see this happen all the time. It goes all the way down to the first bar. It will go to your low bar, which will be like the first green bar. It'll go there. After that, you know, what else is going to do? It might go and do a spring, especially in the consolidations. You always do those springs, especially if you're looking for them. You'll find them. And so this will be a high volume brick right here, probably. Tap tap. So these are the spots or levels that you program in your head. Like, this is in your head. It's not something you need to even look at a chart for. You have it in your head, and then you draw the level on the chart, and just be aware of it and see what happens there. And in many situations, you'll see that that's where the buying and selling comes from. I mean, so that's where it comes from, you know. And also knowing that higher time frame direction. Like, for example, here we know that this trend here that I've drawn is up. So what do you know? You know that the legs that are down, the turning points that are down, like right in here, they will be small, and or they will not work, or they will be very small, and then there will be a big reversal up. So for example, right now, you know that you also know that they could be just covering. All right, so that will help know that a move like this is actually preliminary accumulation, but I don't want to get into that. Move like this is not going to work. Yeah, it's at support, but it's not going to work. Why? Because the trend is down, and when you have trend down, what does that mean? That means you have more chances that the up moves will not work because they are covering. It's not real buying, it's covering and profit taking. Anyway, long story short, I hope you all learned something. And good luck on your Wyckoff journey. Thank you.